All right, we're getting everybody in. Happy Friday, everybody.
Robert, how did you pick that university to go to?
And it was really close, like 3 minutes from my house. It made it easy.
So that was your decision process?
Well, you're born a Gamecock, got to be a Gamecock, got to go do the Gamecock thing.
I don't know. A lot of kids that I grew up with couldn't wait to get away from their parents or being in that area, whatever area they grew up in. Like, I'm gonna
Not me.
go to school anywhere else.
Not
You
me.
stuck close. Nice.
Well, somehow, even though you're a Gamecock, we still managed to be friends.
Yes, except wearing your Gamecock gear. This 30-minute thing on Friday afternoon is going to be about 11 minutes.
Yep.
Um,
Oh, I love it. Y'all, I specifically am wearing my Clemson quarter zip just for my friend Robert. So yeah, if for those of you that do not know, Clemson and USC, which is not the California USC, it's South Carolina, have a very
first in the real.
Yeah, very strong rivalry. So we have a lot of fun during football season. And I guess.
And y'all have done pretty well during football season, hence why we started talking when we got on here early on Gamecock Women's Basketball National Championship, Dawn Staley and team.
That's right. You guys had a fantastic women's basketball season.
And equestrian, in case you didn't know. We were
mighty fine. There was an equestrian team.
Mighty fine at equestrian as well.
Okay.
All right, let's get going.
I'm just saying. Come on now.
Rob, where are you today?
I'm in a very interesting place. So I have been in Yosemite doing some camping with some pals. And to get to Yosemite from the Bay Area, you drive across the Central Valley of California. And right now I'm in an almond orchard. Almond.
That's an almond?
Well, there's a husk that when in harvest season in the autumn, all this green, turns to brown. You take the almond meat out of the shell. But more importantly, more interestingly for me, is here in California, here in the Central Valley, it is just getting into cherry season.
Oh.
And who doesn't like cherry? When I was a kid, so sorry, Robert, we're really digressing here. When I was a kid, fruits and vegetables had seasons, right? It was peach season, it was apricot season, it was cherry season, it was pear season, whatever, apple season. Now it seems like you can go to the store and get all kinds of things from different foreign nations. But in California, you try to stick to eat the things that you like during the season. So it's just coming into cherry and apricot season. So anyway, that's where I am. I'm in an almond orchard.
Yeah. So Brian Trailer says he likes your weekly show and tell time. Last week, was it last week or the week before? What was that show you said that I was doing as I was like saying hello to everybody as we were coming in?
Miss Nancy? Miss Nancy in Romper Room?
Romper Room. Thank you. Femi remembered. I don't remember Romper Room. So we apparently have a Friday afternoon children's show at this point. All right, let's go ahead and get things kicked off. Happy Friday, everybody. In case we have not met, my name is Melissa Langdale. I'm the president and COO of the Mortgage Collaborative, and we're super excited that you are with us this afternoon. If you have not subscribed to our YouTube channel or our podcast channel, if you miss weeks like this where you're wondering what Rob's show and tell is going to be for the week, you can always follow up with us there and listen online at your own time. Also, if you have topics that you want us to cover other than Rob's show and tell, and like in the past,
spitting out cherry pits
and fun things like that, please let me know and we'll make sure to add it in the mix. So today we have a very special guest with us, a dear friend, even though he is a Gamecock. Robert Dozier, who is the CEO of Palmetto Citizens Credit Union. Welcome, Robert.
Hey, thanks for having me. We're not, we were digressing, talking about Clemson, but not about almonds and cherries. So thanks for having me.
Agriculture 3 times a day, man.
There you go.
I love it. Well, for those that are not aware of who Palmetto Citizens is, Robert, would you give everybody a little bit of an overview and maybe share a little bit of your story in the process too? It's a really cool one.
Sure. I am fortunate and blessed to be CEO of Palmetto Citizens in Columbia, South Carolina. $1.3 billion credit union. In a couple of weeks, will be 88 years old. So I take it very serious. I'm a placeholder that was asked to come in and join this fantastic organization. I tell the story, it's the price of admission. When people talk about can little things make a big difference. 88 years ago, 10 educators in Columbia, South Carolina, in the basement of Columbia High School, got together and put $5 together in a pot. So their $50 started what was then Columbia Teachers Federal Credit Union. And with that $50, they said, we need financial services and we need financial acumen, we need financial strength. And they built a credit union that today is $1.3 billion. So as my wife always says, as I tell her all the great things that are happening here, she looks at me and she said, just don't muck this up. So, how I landed here, I've got mortgage that runs through my veins. Very fortunate way back in the day to join a mortgage company in Columbia, South Carolina. We grew that over 19 years to be the largest independent in the Carolinas. Sold that. But during that time frame, my politics and my business collided. I was appointed by George Bush and the Bush administration to go on the board at 34 years old at the Federal Home Loan Bank of Atlanta. So how a guy from Columbia, South Carolina landed on a board of a $150 billion bank, I still have no idea. But I fell in love with the Federal Home Loan Bank, the system, the cooperative model, the taking care of members. And it just stayed with me, so much so that I was asked in 2011 to join the executive team. So moved the family to Atlanta, and for 10 years we were in Atlanta. And as the number 2 guy at the Federal Home Loan Bank of Atlanta, I got to see it up close and personal. That's where we met. And I got to see you in action, and you and 850 of our shareholders around the Southeast. And for those of you who don't know about the Federal Home Loan Bank, I like to say it's the biggest bank that nobody knows what they do. It's the bank for the banks, credit unions, and insurance companies. There are 11 Federal Home Loan Banks around the country. Atlanta is in the Southeast. Our largest shareholder and member owner was Bank of America. You had Capital One, BB&T in the day, now Truist, all the way down to the smallest credit union in Southwest Georgia that I believe was $38 million. So we got to see a lot and touch a lot, but at some point it was time for my wife and I to come back home to South Carolina. Atlanta's a big place, a little bit bigger than Columbia, South Carolina. And I was fortunate to be able to take a little early retirement and get the family home, meaning my wife. Fortunately, the kids have followed, but yeah, I didn't know exactly what I was going to do. I landed at a community bank as president of a holding company, but kind of knew that wasn't my last deal. And sometimes the good Lord's got a plan for you. And I got a call from the chairman of this board and said, we want you to come join Palmetto Citizens. Of course, I suffer sometimes, like all of us, with the cocky, confident bug. I said, what day do you want me to show up? And he's a big time attorney in South Carolina. And he said, no, we're doing a national search. I said, great. What number am I? And he said, you're the 92nd applicant. So it took about 6 months, but this is where I finally found my heart again. I believe I'd found my heart at Homeowners Mortgage. I knew where my heart was in the Federal Home Loan Bank of Atlanta, and putting this together here with 315 incredible associates and colleagues is just the blessing of on top of blessings every day. I count them for sure. So enough about me.
You also sit on the board of United Homes Group, right?
I do. So United Homes Group is a regional home builder, started about 22 years ago as Great Southern Homes. And Michael Neary is the founder and the CEO and board chairman. But he wasn't done and wanted to figure out how to make a bigger impact. And just the timing, once again, you just never know. So when I got back to Columbia, he asked me and several others, and we took that as a journey to take a wonderfully grounded home builder group, and we took that public. Almost a year ago today, I was in New York ringing the bell on the NASDAQ, and just an incredible opportunity to learn and keep hopefully giving back a little bit on that. But man, I probably learned way more than I give on that deal. It's phenomenal opportunity for me.
Well, Rob, you don't have a nut allergy, do you? I hear you.
Yeah, I was a little worried.
Okay.
No, I'm all right. I'm all right. Well, Robert, I wanted to ask you because I mentioned this in my opening paragraph today about, I think Melissa said that quote, you were in the room, whatever room means these days, when they were working on, or you were working on Joe Biden's State of the Union address, especially with regard to housing. How did that come about, and who else? I mean, what does that entail?
So, listen, timing is everything. And Melissa and I debate on, where we all land in politics. I'm an equal opportunity guy. I probably lean conservative, but have many friends on different sides of the aisles because I think you can't pick in our business. Home ownership is, I don't know. I want Republicans and Democrats to get homes and put roofs over people's heads. But Steve Benjamin works directly as an advisor to Biden in the community outreach office, and was in his office the day they were putting the final touches together on the State of the Union. It was that day. And just, you could tell there was a buzz about needing to address affordability and what was going on in the world and in our world, just home ownership being out of reach. So the thought of tax credits and pushing for opportunity and giving people an opportunity, given that interest rates are sky high, listen, in fairness, as compared to 2021 when they're 2 3/4, probably not sky high, Rob, when you and I got in the business. I mean, when I got in, interest rates were at 10%, coming down from 18. So, a 7% interest rate today, on average of my 34 years, isn't all bad. But the shock from going to 2.5, 2 3/4 to 7.5, 8% has been great. So just being in the room with Steve and his advisors and hearing firsthand and getting to, at least say my opinion on at least there's a focus. I think Melissa asked me this week, she said, well, what has been done? And I haven't seen anything actually done. I think the important thing is that when you go through a State of the Union address, you pick up on themes. And there are many, many themes. I won't get into politics here in that State of the Union address. But the fact that affordability and homeownership was addressed means that during this election cycle, we should take that as a win, that it's going to be talked about on the trail. And as more it's talked about, the more we can start talking about how to address some of the affordability issues. And I think that's the challenge and the problem.
I'm always curious why, there was very specific kind of solutions, I guess, that were presented in that, but one of them was not a tax credit for small investors, which frankly, I think would open up the inventory pool some. Did you have any insights into that as you were having discussions with them?
No, I think,
Totally going off
at
script.
the end of, I think at the end of the day, that's above my pay grade, but, I think at the end of the day, you hit the bullet points and get the message out. I think the people in our business, right? I mean, you and I started talking about it the minute it was announced. So it got our attention. So mission accomplished. And the fact that we're still talking about it 2 months later, right here, mission accomplished. Mission accomplished on getting the dialogue going. A lot of work to be done behind the scenes.
Yeah. I want to, Rob, you look like you were going to talk. Oh, we can't hear you. Oh, you're muted.
I'm going to be a little bit confrontational here, Robert, because that's just the way I act sometimes.
That's the way you roll in an almond
yeah.
field.
So there's a lot of, it's kind of like going back to the subprime crisis, 2008, and the brokers are pointing at the borrowers, and the borrowers are pointing at the brokers, and the brokers are pointing at the lenders, and the lenders are pointing at, the rating agencies. I mean, there's a lot of finger pointing going on. And, people ask me now, what's the solution? And I say, the solution to what? Well, housing affordability. And I say, well, housing affordability, it's just you can't point at interest rates because there are other factors that go into this. Homeowners insurance. Let's talk about homeowners insurance skyrocketing.
Taxes.
Let's talk about taxes. Let's talk about permitting costs. Let's talk about lack of labor to build starter homes. Let's talk about lack of land. There's a lot of fingers pointing right now, and there's no comprehensive plan to do much of anything. And I tell people, even if rates were 0%, and even if you didn't need any kind of underwriting to qualify, if somebody wanted to buy a house, the house has to be there for that family to move into at 0% with zero qualifications. What are you seeing builders doing in terms of, there's a lot of fingers being pointed at builders, but what are builders actually doing? Are you seeing a huge shift towards building starter homes because it's been brought up by the Biden administration? Or do you see builders still building, 1 acre ranchettes for, $500,000?
So I think you look across the board, and I'm going to answer your question, but I'm going to go to commercial side of the world before I go back to residential. When I talk to really top-rated commercial folks, they say, what people want is less space, but they want it tricked out. We're building a new corporate headquarters, and we're gonna have a floor. I was talking to them. I said, can we get a law firm to come in here and lease our 20,000 square feet that's going to be available? And said, yeah, but man, we're going to have to find a big law firm who wants to step down a little bit, but you're going to have A+ space. So I think number one, on the builder front, I think they are absolutely looking at density and seeing what they can get. It's not the 1 acre ranchette. I think they're tightening it up a little bit. I think instead of 2,800 square feet, you're seeing 2,100 square feet, specifically talking about United Homes Group. And I have to be really careful because I'm in blackout and we have earnings next week. But just what I've seen up until this point, just shrinking the footprint a little bit, but making sure the amenities and access to those amenities and having choices on those amenities is first and foremost. I don't think you're being confrontational. I agree with you. There's a lot of finger pointing. I think at the end of the day, the winners, listen, there are a lot of people that jumped in the business when rates were at 2 3/4. I mean, my most favorite waiter at Hall's Chop House in Columbia, South Carolina, went in a mortgage business. Like it's just some easy thing. Just, I'm not going to wait tables today. I'm going to go do mortgage loans. It takes a lot to not just jump in the business, but be a sustainable participant and understand what homeownership really means. And I say this to anybody that listens, I don't like pointing fingers. What I want to do is go find the person who needs us tomorrow and who I can look in their eyeballs. Not that I do it directly every day, but I've got a great team that does and is focused on mortgage. We're owned by 83,000 member owners in the Midlands of South Carolina. There is somebody this afternoon who's in need of home ownership. If we can get our arms around them and help them come up with the best solution that we have today, maybe that's a 5-1 ARM because we need a little less interest rate. Maybe that's, and I hope we talk about this, Federal Home Loan Bank, down payment assistance, put on top of that, whatever we can get. Let's talk about the why behind home ownership. It still means putting a roof over somebody's head, give somebody the ability to really focus in on self-esteem, self-worth, the real ability to create wealth over time. And then I'm a multiplier, right? However I do, how do we multiply this? You do that one time, that's awesome. You've done a great job. You do that twice, you've created neighbors. You do that several more times, you've created a neighborhood. You do that several more times and we're building community. So I just like to break it down to let's go find the person who needs us today and start there and build from there and not point fingers.
I want to touch a little bit more on the builder world because builders are really challenged right now. They've got labor shortages. They've got challenges.
3 L's, right? Labor, land, and lumber.
That's right. That's right. They've got challenges with municipalities and impact fees, and that density you were talking about is sometimes limited based on what that municipality has. And so they've got a lot of challenges in front of them. What are you seeing as the biggest challenges? Number one, maybe it's something I missed, but also, are there things that you're seeing builders do to help navigate, I guess, the headwinds that are in front of them?
So go back. I do put it in the 3 L's: labor, land, lumber. Labor expenses up. Land is very expensive. So I do worry about the mom and pop builders just because it's hard. They're competing to find those lots. So I think like United Homes Group, one of the reasons we went public is to be able to access funds, raise capital so that we could go out and secure a bigger piece of a smaller pie. I mean, admittedly, is a smaller pie. So Michael Neary said we have to grow regionally. Being in the South, I don't take it for granted that we're in the South and people are moving here. So there's some need. There's the challenge just of finding the people. But think about it, Melissa. We were at several conferences 10 years ago, and what did people say? Oh my gosh. I mean, the first time home buyer piece is over. People are scared. Kids are going back home. They're living in the basements. Well, I've got 2 millennials. One of them, I think, is on the call with us today because she's in the business. But speaking of my middle child, Eliza should be on. She said she was going to get on. But my middle child, Rob, you know, he came home. He lived in the basement, and then he moving on up, right, to the finish room over the garage. But then he finally moved out, and he got his house and his job, and he's got a fiance, and they're getting married. They live in a wonderful house, and they've got 2 dogs. They've got a 2.75 interest rate. Guess what? They couldn't put a canary in that house next. So there is some pent-up demand that I think the builders are working with that are just going to be natural. You can't put a lid on household formation. Yeah. When it's happening, it's happening. So I think that's happening. So I think the builders are playing into that. I think they're being very creative right now on incentives. On incentives, like they're paying 4% for rate buy downs. They're working with their lenders to get forward commitments from Fannie Mae. So you take a 7 3/4 rate and all of a sudden turn it into 4.99. That's attractive. I don't think buying an interest rate instead of a house is a long-term sustainability. So I think that's a headwind. I think it's helped them. I think that's a headwind. But, you know, for mortgage folks out there, I'm amazed because I don't like, Rob, you're right about the finger pointing. Let's not finger point. Let's go figure out how to fix this thing. I'm amazed that mortgage lenders aren't using programs that they have right now. Fannie Mae renovation loan. If I was a mortgage lender right now, I'd be talking to builders to be the preferred lender, because this is what I'd say. Don't spend all your money on the garage, you know, and a builder's going to look at you like you're crazy. Put the footprint in for the garage, but don't spend the money to build the garage. We'll do a Fannie Mae renovation loan, get the money locked in, close on the loan, and then we'll come finish the house and build the garage. And boom, it's part of that deal. Do I think that, you know, every builder in town will take you up on it? But no, but how many people are going to talk to them and you can get on their radar screen for being a smart cookie and coming to the table with a solution? That's what builders want right now. Bring them a solution, not waiting for the phone to ring. And that's what we're telling our folks every day. Get out there, meet them. I mean, this is old school, right? I mean, when's the last time that a mortgage lender went to an apartment complex to do a home buyer seminar? You know, I said that the other day. Somebody looked at me like I had 3 heads. I said, why would an apartment complex want somebody to get a home and go out there? Well, when you leave, then they get to charge higher rents. It's part of their model. You're helping them fulfill their model. I just think we got to get creative and we'll make it through. This is cyclical. It's going to come back around like we've seen it. I've been doing this for 34 years and this is my 3rd bad cycle. Yeah. So every 10 years, I'm going to go hide under a rock for a little bit.
No, don't hide. We need that passion. It's, you know, I think mortgage as a whole, you know, because we do go through so many cycles, we have officially perfected the art of the pivot. But in some cases, it just takes going back to the basics.
It's like we're forgetting at 8%, 7.5%, whatever rate is, 7.25%, whatever it is today. I don't care. I'm agnostic to it because I didn't get excited when they were 2.5%. You know, if we really look at an average, we're going to look back and go, that 5-year average was at 5%. But 2.5% was not sustainable. It was not real. And people started, you know, doing mortgages like it was crack cocaine, you know, just something crazy. This isn't real either. This is just a pendulum swing until we find that equilibrium and we're going to find a balance and we're all going to be happy again.
Rob, this is another rundown where we've talked about cocaine.
Wouldn't know anything
Yeah,
about
Robert,
it.
I forgot to tell you, Melissa's got
read about
it. I know we only have 3 or 4 minutes left, Robert. Those are some marvelous things that you've talked about in terms of offering builders solutions to issues. I think as an industry, we still look at, you know, you've got younger kids. I've got, well, not younger, but home buying kids. I've got the same age group. Melissa's aren't quite there yet, but there's 60 or 70 million millennials out there, and a lot of them don't have places, right? So I know that a builder, it's like turning an aircraft carrier to get a builder to, I mean, by the time you locate a piece of land and then figure out what you want to put on it, get the permits and figure out where the water is going to come from and the impact, the environmental impact. So I mean, it takes a long time. But you're right. It's a cycle and it's a process and you know, we try to do what we can.
Yeah, 2 to 3 years from.
So Melissa, I think they're flashing up in terms of the questions or comments. Anything you want to ask Robert in the waiting minutes here?
Matthew says Cocaine Bear is the best.
We didn't mean to get that started. It was just a bigger speech.
No, I think we should talk just for a few minutes about some of the FHLB options. You know, you mentioned that some of those not everybody knows about. I mean, there are some down payment assistance options available that I think would be really helpful for everybody.
Yeah, so just quickly, so Federal Home Loan Bank, under their government-sponsored enterprise charter, gives back 10% of their earnings in the form of down payment assistance and affordable housing programs. So this year, and this year specifically Atlanta, and everybody can check with their own local Federal Home Loan Bank if they have access to it. But Atlanta is going to have right at 100 million in affordable housing dollars, half of which will be for down payment assistance. So that's $12,500 for a first-time home buyer, up to $15,000 for community partners, which would be healthcare workers, teachers, and first responders. So whether it's 12.5 for a first-time home buyer or $15,000, what are the two questions that people ask when they're buying a house? What do they really care about? They don't talk about rate. They go, what's my payment and how much does it cost to get in the house? Yeah. And so I think we can offer that solution by down payment assistance. For us at Palmetto Citizens, very proud. We went and tried to offer a solution to a problem. Teacher recruiting in Orangeburg County, a county with lower socioeconomic demographics, hard to get teachers to land there. So we're offering $15,000 in a partnership with the school district to let them go recruit against all the big school districts by saying, if you'll move to Orangeburg County, we'll get you $15,000 house. Now, what has that done for our mortgage professionals? Great. Teacher, we got a deal. We have a deal. Awesome. We announced this 4 weeks ago. We've got 4 or 5 under wraps. So we're working them. But the loan officer, what do they get to do? They get to take those 3 or 4 or 5 deals and go to the realtor who last week said, and I quote, hey, we've got in-house mortgage company. We can't talk to you. Oh, okay. Well, I was going to bring you 3 or 4 deals to go close on and put them in your car and let you go show them houses. They're pre-qualified and they're getting down payment assistance, but I'll go somewhere else. What do you think they say? They go, oh, come on in. The order's fine. Come talk to me. So I think we're just trying to provide solutions for the Orangeburg County School District, right? Our loan officers to get deals and then leverage those to build bigger and better relationships. And I think that's how you build a mortgage company.
John has a great question in the chat. He asked if FHLB loans will ever become available to brokers or TPO.
So, there's a lot of talk in what's called Focus 100, Federal Home Loan Bank Systems turning 100. And I think the question about who will be in the field of membership for Federal Home Loan Banks, there's a lot of work with Mortgage Bankers Association, specifically about working with, that's a congressional decision. Mm-hmm. So about opening up the charter. I don't get in the middle of that debate. It just is what it is right now. It's banks, credit unions, and insurance companies. But the talk about not only affordability, but accessibility to these programs have brought up a lot of questions. So I would say to John, stay tuned. A lot of talk nationally about that, and you'll probably have time to chime in. Today, not directly. There are some of members of Federal Home Loan Banks who are offering third-party channels that will allow you to tap into that, but those are, hit and miss kind of who's offering it, who's not.
Yeah. All right. We are all up at time. Thank you so much, Robert, for sharing so much time with us this afternoon. Your insights were awesome, and I'm so glad we got a chance to spend some time with you and hear everything. Everybody, thanks for joining us as well, and we will see you again next week. Happy Friday, everybody.
Thank you.